Hello and welcome to AI Market News by LM. Okay, so there's a new kind of fear that's absolutely gripping global markets, and it's sending these huge shockwaves from Wall Street all the way to Asia and Europe. And this time, it's not about the usual suspects like interest rates or geopolitics. Nope, it's something much more futuristic. It's all about AI. Today, we're going to dive right into this sudden turmoil and ask the big question: who is next?
The phrase that's suddenly on everyone's lips is the AI scare trade. I mean, it's a term that kind of feels like it just appeared out of nowhere, but honestly, it is the key to understanding the massive sell-offs we're seeing. So what in the world does it actually mean?
You know, at its heart, the AI scare trade is basically investors making a preemptive strike. They are dumping shares in entire industries that they believe are on the verge of being completely upended by artificial intelligence. And this latest wave, it was kicked off by just a single announcement from an AI company. They revealed their platform let a client boost their freight volume by 300 to 400% without adding any new staff. Wow, that one single data point sent a massive chill through the entire logistics sector.
But here's what's really fascinating. It's how quickly this whole panic went global. I mean, what started as a pretty specific tech and logistics issue in the US definitely did not stay there for long. Let's take a look at how it spread.
So the first domino to fall was, of course, Wall Street. We saw a really broad sell-off hit the S&P 500, but the tech-heavy NASDAQ, it took the biggest punch, dropping around 2%. It was just a classic risk-off move, you know? Investors selling first and asking the tough questions later.
But as the US market closed for the day, that fear was just getting his passport stamp for a trip around the world. The anxiety just spread like wildfire as trading desks started opening up in Asia.
And right here, we can see that ripple effect in real time. Asian markets woke up to the news from Wall Street, and boom, immediately came under pressure. Europe was next in line, with the STOXX 600 falling as investors there started chewing on the exact same fears of AI disruption. The overall mood was described as, and I love this phrase, characteristically dire.
You know, in any kind of market panic, we always see this great rotation. Money just pours out of the sectors that are seen as vulnerable and rushes into what are perceived as safe havens. So let's break down the winners and the losers in this AI scare.
Ground zero for this entire sell-off was the logistics sector. It got absolutely hammered. I'm talking about major players like Denmark's DSV and Switzerland's Kuehne plus Nagel plunging more than 10%. For companies like these, the abstract fear of AI suddenly became very, very real.
And here is the classic playbook in action. We saw this mass exodus from anything considered a riskier asset. Stocks in logistics, tech, even real estate were sold off. And what's interesting is that even traditional safe havens like gold and silver fell, and so did crude oil. So who was the big winner? Well, it was the ultimate safe haven, US Treasuries and government bonds. They're seen as ultra safe because, well, they're backed by the full faith and credit of governments.
Now, it's really important to get this. This AI panic is not happening in a vacuum, not at all. It's actually colliding head-on with a huge piece of economic data that the entire market is waiting for. And that's just adding another thick layer of uncertainty into the mix.
This is the number that is everyone on the edge of their seat, 2.5%. That is the consensus forecast for the year-over-year US Core Consumer Price Index, or CPI. It is the key inflation reading that the market is just so anxiously waiting for.
So why? Why does this one single number hold so much power over global markets, especially right now when they're already so rattled by all this AI chaos? Well, it all comes down to the Federal Reserve. The CPI number is a direct input for their biggest decision: what to do with interest rates. See, if inflation comes in cool, it basically gives the Fed a green light to think about cutting rates, which would be a huge boost to the economy. But if it comes in hotter than expected, those rate cuts get pushed further and further down the road. And that's something the market really does not want to see. Okay, so with this really volatile mix of AI fear and inflation anxiety, what are the key indicators and events we should all be watching over the next few days? In the currency markets, we are seeing a ton of tension. The eurodollar is kind of stuck, trading in this really tight range, basically just waiting for that CPI data to give it some direction. Meanwhile, while the dollar has been gaining against the yen itself is actually on track for its strongest week in a long time, and that reflects that flight to safety we were just talking about. This chart, which shows us something called market breadth, tells such a powerful story.
Now, market breadth is just a fancy way of measuring how many stocks are going up versus how many are going down. And as we can clearly see, declining stocks are absolutely overwhelming the advancing ones by a massive margin. This shows us it's not just a few big names falling. No, this is a broad wave of selling, which tells us just how deep the negative sentiment is right now.
Looking at the economic calendar from investing.com, the focus today is squarely on that US CPI report. We also have a speech from Fed official Lori Logan, which you can bet will be scoured for any clues on policy. And then looking ahead, key data like Eurozone GDP and a speech from the Bank of England will definitely keep markets on their toes.
And all of this brings us to the ultimate question, doesn't it? We're at this absolutely fascinating crossroads where long-term technological disruption is colliding with short-term economic uncertainty. So in this kind of environment, where does the smart money go next?
This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion.
Thanks for watching. And hey, don't forget to like and subscribe.